This is the start of a significant shift in monetary policy, and more rate cuts are coming. The Federal Reserve just cut interest rates by 0.5%. Now, this was an expected move for the Fed to cut rates at this meeting. What we didn't know if it was going to be by 25 basis points or by 50. And by cutting by 50 basis points, the Fed makes a bold, aggressive move that sends a message. Now, in this video, we're going to deep dive into this rate cut by the Fed. We're going to talk about what it means for the economy and, most importantly, what it means for you and me. Now, before we get started, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. So the Fed decided to go big and cut rates by 0.5%. Now this is going to lower that Fed fund rate down to a range between 4.75 and 5%. Now for the last couple of months, there's been some back and forth about if they're going to cut rates by 0.25 or by 0.5%. Really, anytime you had inflation data come out, CPI data come out, debates would start to happen. Well, the wait is over. It is a 50 basis point cut. And interesting to note, out of the 12 people that voted for the cut, 11 were in favor of a 50 basis point cut, with just one person that voted for a quarter rate cut. This is the start of a significant shift in monetary policy, and more rate cuts are coming. Now, the Fed did lay out some projections. They let people know that they expect to cut by another 50 basis points by the end of this year. In 2025, they expect to cut by 1 full point, and in 2026, they expect to cut by another half a point. So by the end of 2026, rates would be about 2% lower than where they are right now based on these projections. Now, what you have to keep in mind, these are only projections. They can change at any time now. At the beginning of the shift in policy with the first rate cut, it's important to know, kind of where they stand, where they want to go with things, but also understand, depending on where the economy goes, how things shake out from here, those numbers could change. They could come in a lot quicker. They could slow down. It could go the opposite direction. But just know that if things kind of remain steady like they really have been, how they do most of the time, unless something crazy happens in the world, expect that those rate cuts that they have in mind in the projections for them to take place by the end of 2026. But regardless of the projections, and all in all, the Federal Reserve has cut interest rates by 0.5%, and they are expecting to start cutting even more. Now, Jerome Powell, he did release the official statement that they do after these meetings. He talked about the state of the economy, how the Fed feels about things, and all in all, they feel that the U.S. economy is in a pretty good place. He sees that inflation is starting to go down. It's getting closer and closer to that 2% target. And it's really that labor market that's been cooling for the last couple of months that with this rate cut, they are hoping to address it. Now, we have to keep in mind that, economic data and the effects of this rate cut, you're not going to really know the effects for months and months. We're probably going to be sometime into next year before you really start to see what this rate cut meant. We might even get that next rate cut or the next 2 rate cuts before we really start to see that picture of how the economy is shifting from these rate cuts. These things take months. You're talking 6 to 9 months even before it starts to really soak into the economy. But the labor market was cooling and inflation is ticking down, and the Fed sees this as the appropriate thing, before a recession happens, to start to shift things. And you have to also keep in mind, we did not know what was going to happen when rates started to go up. All we knew was that inflation was starting to go through the roof, and before it got out of control, that rates had to be raised and the economy had to be tamed. At times, when you're in that type of situation, it could lead to spiraling unemployment, and unemployment that kind of hurts really bad and affects a lot of people. That was a possibility when rates were starting to go up. It was a possibility in 23, it was a possibility in 24 when all of this unemployment data started to come out and it was ticking up. It was a possibility for it to spiral out of control at that time. Well, the Federal Reserve saw it cool and they understand that. And Powell made it very clear that they had a goal to tame prices, to have prices just be steady and how they should be, the prices of food, goods, and different things that we buy, but also they want to keep employment, those numbers good. And it's a balancing act. It's a difficult thing to balance because you don't want either one to be too good. They have a difficult job, and this shift in policy, it's kind of where they are economically for their job. So again, we have to keep in mind we will not know the full effects of this rate cut for months, but we have entered a new shift in monetary policy. We have more rate cuts that are expected down the line, another 50 basis points this year, a full point in 2025, and another half a point in 2026. But the Federal Reserve, they went big, they went bold with the first move, their first rate cut in years. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.